That's interesting because we can see signs that prices are bottoming out in the market now in the monthly data, which are released by REINZ. And as I've said before, at some stage, this 2-year queue of people is going to step forward. Well, hello again, everybody. Things certainly never stay the same when it comes to talking about interest rates or where the housing market is going. And obviously the big thing we're all trying to factor in at the moment is the impact of the government's budget. It's an election year budget, so probably no surprise that there was quite an easing of fiscal policy, extra spending by the government, but maybe that easing was a bit more than most of us were expecting. In fact, Treasury make an estimate of the impact on the economy of whatever is announced in the budget, and what they estimate is that it will boost the rate of growth in our economy by about 1.7%. Now, when you put that alongside the strong return in the number of foreign visitors coming to New Zealand and the boom in the net migration numbers, what you get is Treasury now saying there will not be a recession in the New Zealand economy. Well, all I can say in response to that is thank goodness since the Reserve Bank started talking about this in the final week of November last year, my view has been that it's a 50-50 call as to whether we will in fact have a recession in New Zealand, given what was always going to happen with the tourist numbers when the borders opened up, and of course what we could see developing with the migration numbers in particular. The net addition to our population of almost 65,000 extra people over the past year, about a 1.2% population boost. I think we all can figure out what that's likely to mean eventually for the housing market in terms of prices. But the first impact, which comes from a population boom, is in the rental market. And that's the sort of thing I try to get insights into from the monthly survey that I do with Crocker's Property Management of residential property investors. And what we can see there is, first of all, that investors are getting highly pressured by rising maintenance cost, rising insurance costs, and also the progressive increase in the proportion of interest expenses, which they can no longer deduct from their rental income. So I'm seeing more and more investors thinking about selling. The average term they're looking at holding their property is going down. There's certainly no extra wave of selling which is occurring, but basically they are stepping back from the market. That is quite significant because what we've seen over the past 4 months has been first home buyers stepping into the market and people asking the question, well, are the investors going to follow, as we've seen a number of times over the past few years? I would suggest that is not going to be the case, given the tax changes and, of course, given the high level of interest rates. But with the acceleration in population growth, investors are increasingly saying it is relatively easy to find good tenants out there. There's a bit of a trend increase in the average rental increase, which they are looking for, and the proportion of investors who are looking to, in fact, increase their rents. And that becomes important in the context of, for 2 years now, a lot of people have been sitting back from the housing market, initially in 2021 because they simply couldn't find a reasonable property that they wanted to buy. The number of listings was at a record low, so people were sitting back as prices escalated over 2021. And then from late 2021 and all through 2022, we had people stepping back from the market, expecting house prices would fall further, so not wanting to buy, and then watch the price of whatever they would purchase go down further. That's interesting because we can see signs that prices are bottoming out in the market now in the monthly data, which are released by REINZ. And as I've said before, at some stage, this 2-year queue of people is going to step forward. We've got a tightening up, which is now happening in the rental market, and that tightening up is being accentuated by properties going back to servicing the foreign tourists, Airbnb, etc. Also foreign students coming into the main centres, so that's taking up, for instance, a lot of the apartments in the middle of Auckland. Things are starting to move out there. And of course, one of the other things moving is Treasury now no longer predict that there will be a recession in the New Zealand economy, taking into account the extra fiscal stimulus in the budget, the return of the foreign tourists, and of course the extra migrants coming into the country as well. Now, at some stage, people are going to pull back from being worried about a recession, and it's going to lead to a few more eyes being cast on the real estate market out there. Now, the big issue, of course, at the moment is, will this extra spending by the government in the election year and many years afterwards actually lead to a response from the Reserve Bank? Well, at the time I'm recording this on Monday evening, we don't know. Maybe by the time you get to watch this on Wednesday afternoon, we get the Reserve Bank giving basically their assessment on where they see things going. And they have warned for over 18 months that if the government eases fiscal policy, there might be an interest rate response. So maybe the interest rates will sit slightly higher than would otherwise be the case. But from my point of view, looking at those longer term trends, declining construction in the economy of new houses, falling number of listings, interest rates very near to their peak levels, if not having already peaked, a migration boom and a 2-year queue of people, the housing market is going to turn around in the near future. It's really just a matter of, will it happen ahead of the election and all the uncertainties which that brings, or will people actually wait until a little bit after? The payoff from waiting for prices to decline further statistically is looking less and less beneficial, shall we say. So good luck to all those first home buyers out there who have been waiting for the market to bottom out. I think we're just about in that territory at the moment. But as to what happens afterwards, that actually I think will be quite interesting over the next 2 years. All the best.